Stock markets across Asia have taken a tumble after China's economy suffered its worst plunge in a decade. Mainland share prices have recovered, but not enough to make up for yesterday's 9% drop amid speculation about government plans to slow the nation's bullish economy. Heyling Chan has details on a market setback that triggered a global sell-off.
Chinese markets had been on a bullish run ever since they were opened up to global investment a few years ago. Then came Tuesday's trauma as investors dumped shares amid speculation the government would try to slow the nation's economy.
It was affected by rumors. Some investors felt the government would take measures to control the market, and some felt the central bank would raise interest rates or impose a stock capital gains tax.
Shareholders were also spooked by comments from America's former Federal Reserve Chairman Alan Greenspan, who said the U.S. may be headed for a recession. Whatever the reason, China's record low rippled on throughout Asia, sending markets into a tailspin. It had a major impact in Hong Kong, Tokyo and Singapore, Malaysia and Indonesia, and in the Philippines. Then U.S. stockbrokers woke up to their worst trading day since the 9/11 terror attacks.
I think the concern is that Chinese growth is going to slow as a result of these new restrictions, and that could have a negative impact on global growth, and hence could have an impact on American company earnings or European earnings, Japanese earnings, and that's why you're seeing the ripple effect around the world.
Despite the stumble, analysts remain positive about the Chinese economy.
Our expectation is that it could be a pullback to a correction, but based on economic growth, earnings projections, as well as valuations, we definitely do not see the beginnings of a new bear market.
Some investors are already looking for opportunities.
This is the time to go in and buy stocks. As the stock market plunges, the market will be clearly washed out. When it rises again, it will have better fundamentals.
And China is apparently trying to ease market jitters, with one report from the official Shanghai Securities News saying Beijing has no plans to go ahead with that feared tax on stock gains. Heyling Chan, Star News Asia.